Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, getting close to evening on a Saturday. I don't know, I guess ever since I started getting involved in Bitcoin, I've sort of left the rest of the markets behind. I haven't traded on the stock market, I haven't done any options, no foreign exchange, currency, trading, and I traded all of those things before I got involved in crypto. And so I've kind of been a little bit out of touch with global markets, thinking that Bitcoin and Ethereum and these others would sort of live their own life and be their own thing. And I guess over the past couple of weeks, and you've probably seen the evolution over the past few weeks of videos, I'm starting to realize how much the S&P 500 and the broad markets, especially US markets, are impacting Bitcoin. And so I decided that today is a good day for a little bit of artificial intelligence, data mining, and research. So I have a couple of things I want to throw your way. If Bitcoin is going to follow the broad market, it might be an interesting study to look at the S&P and see where we think it's headed. Because like it or not, Bitcoin is moving exactly the same as the rest of the market. And so, coming to this realization has made me think, all right, it's time to get serious about doing some research on the normal broad market. So what we're looking at is the S&P 500, the SPY index. And all I'm doing is just looking at the movements of the S&P. And what I decided to do is do a little bit of AI research. And all I did was I downloaded about 30 years. Yeah, about 30 years worth of trading history on the S&P. And just took the close prices, and then my AI consisted of calculating what is the difference between whatever close. So today's close, what was the gain or return 1 day ago? So this is the T-1 column. So this is yesterday's return. T-2 is what was the return over a period of the last 2 days based on today's close and 2 days ago's close. And then I did T-3, 5, 8, 13, 21, 34, 55. So golden star goes to whoever realizes what these numbers are. This is the Fibonacci sequence. I figured for purposes of this AI, I would just use the Fibonacci sequence to say, let's weight this heavily on the most recent activity in the market. And then we will also take into consideration moves that the market has done over time. And then what I've done is I've calculated the difference between yesterday's close, or whatever information we're looking at. So I'll just hover over this. So we are comparing the difference between these returns 1 day ago, 2, 3, 5 from this date versus yesterday. So yesterday's close, I'm comparing everything to see how close we can get another event in the past where we had a negative 2.7% return over the past day, and et cetera, et cetera, et cetera. So this column shows the difference between these data points and the data points that were generated from yesterday. And then all I had to do was simply order them from smallest to largest, and we have historical data of dates that are doing almost exactly what we are doing today. So here's our data. I've just moved it over here so I could easily order the rank. So the first one, and I will just zoom in a little bit on this so that you can see a little bit better. The day in the past 30 years that's most like our current chart was May 28th, 2001. So let's see if you guys agree with my AI research and see if the results, if the shape of this chart matches what March 28th looks like. So I've pulled it in right here. And this is March 28th of 2001. So it's not too bad. You can see some pretty striking similarities between price action that's happening currently and price action that has happened in the past. I mean, it's not perfect, but looking at returns from the close here versus yesterday, 2 days ago, 3 days ago, 5 days ago, 8, 21, 55, this most recent move matches pretty close to this most recent move. And so, using this as a data point, let's see what the market would have done. So this is the result of, so this is our test day. So there was another bounce to be had. So the next week was another move down, and then we kind of had this move to relief over the next couple of months. It didn't end up staying, so there was still kind of a weak point and more of a fall off later on. But the immediate downside pressure from a move like this was sort of resolved. So that's kind of interesting. So this is the day that mirrors what we are doing currently the most, according to my AI research. So now let's take another data point. Let's look at October 4th of 2002. So we got 2002. We're looking for October 4th. August, September, October 4th. I think that's this data point. Nope, it's right here. Okay, so let me slide this over just a teeny bit. Okay, so this day, does it mirror what we're seeing in the markets here? There's a bit of a broad sell-off, we kind of got down to a climax, which this definitely looks like a climax. A little bit of up and down and a relief rally, and now we're doing this jog here. Totally, I mean, it looks pretty close. This probably, yeah, this looks pretty close, even especially with the drop down here. This drop down here moves is pretty reminiscent. Okay, so then let's just see what this result would have been. So in both cases, they both went down for a few days, but then look at that, a relief rally for about 2 months. And did it fully get out of the woods? In this case, yeah, it looks like it resolved pretty well. We never got back to this low, but isn't that interesting? Okay, so that's kind of fascinating. We have 2 data points that say, based on our most recent price action, we might have another rough week to go, but then there's a possibility that we'll move to a higher level and stabilize for a bit. You know, this is obviously, you know, you can't say that the historical data is going to predict the future in every case, but this is an interesting kind of test. Okay, so our third and fourth most like periods were actually recently. So it is May 18th and 19th. 19th is the most recent one. So these are all 2022. It's not too hard to go back to May. So May 19th is most like our current. So that's this move here. So this day and this day, both of these are third and fourth most like our most recent activity. So if you kind of look at it this way, here's this move is a mirror of this move, and we're about right here where these prices were right here. So these actually show that there's probably like 2 weeks of upside, and then another kind of down, and then another relief rally for a couple of months. So now that is interesting, right? I mean, this particular data point is saying that there's a match between this action and this action, and this. So we're 4 for 4 on. After a little bit more down, we've got a couple of months of upward or stabilization. So I mean, that's unusual. Like that's pretty interesting information. So let's keep looking at other data points. The next one is June 4th of 2010. So June 4th, 2010. Where are you? Let's go see. 28. 2009. Okay, now we're looking for June. Let me zoom in again. April, May, June 4th. Okay, is that this day here? June 4th. Okay, so it's this one. Let me move it over just a teeny bit. And our price is a little bit higher because we have got data points down here. So what do you think about this one? Maybe I'll move in a little bit more. So both of these kind of sharp move down, little relief, move down again, and now we're kind of here. So that's essentially this move. So this is a pretty interesting one. The long term doesn't match because we don't have, you know, lower highs moving down, and this is our third lower high. This is all moving up, but the most recent price action is the same. So there may not be quite as much fatigue. If I was just, you know, looking at this as an analyst, I would expect that because of the missing history here, this one might have more downside because of there's not enough kind of tapering of some serious history in there. But let's look. Let's see what it would have done. Very fascinating. So June 4th would have been here. So another half a week down. In this case, we didn't have a couple of months right away. We did still have another bottom to go, but this does look like a couple of more months of upside. So very fascinating data point there. So that's kind of interesting. So that's 5 data points. I won't do every single one, but it is pretty fascinating. It's kind of fun to look at examples of what if situations. The next one is the year 2000, October 25th. So that would be right in here. Let me just zoom in. Okay, I'm kind of ruining our surprise, but October 25th, that is this candle here. So kind of same story as our last one. We don't have the historical lower highs. This one's certainly not as dire, but this move is very, very similar. And by the way, it should be similar not just in shape, but it should be similar in percentage. So the percent drops and everything should mirror very closely. So this move is reminiscent of the most recent price action here. So then again, let me move over and see what it would have done. And in this case, we kind of got a little bit of relief right away, and then there were a few months of down, but nothing like insane. It wasn't insane. It built up to that. So anyway, this one isn't quite as optimistic. So this can kind of temper our expectations. I'll just do just a couple more. The next one that's most similar is March 7th of this year. So we can actually see that right away. March 7th. So that's this candle here. So looking at this move down to this candle, oops, this one. And then here's another sort of week of weakness. And then we had about a month of upside, something like that. So this is the expectation of a move like this. So I'll just do one last data point and we'll call it quits. Actually, it's no different. It's essentially 2010 June 7th. So we've already looked at 2010 June 4th. But if Bitcoin is going to match the S&P, it might be useful for us to look at a little bit of data consensus from historicals on the S&P to see what the current chart formation, the current sentiment from the most recent activity. I'm using data as old as 55 days ago, and so I'm looking at kind of this section here, and if I could figure out what the chart did after a move that was similar to our most recent 55 days, it'll definitely paint the picture of what is possible going forward. So I'm not sure what to expect Monday morning, but I think that there are more cases. It appears from this research that our above 50% probability is that things start stabilizing for the next month or so after we have one more week of weakness. So I don't know, take that with a grain of salt. It's just kind of back of the napkin AI research for you. But it might help inform, because if we have another week of downside on Bitcoin, I don't know. Do we retest down here? I mean, are we down in the corner of this descending triangle? The research suggests that after whatever comes this week, we are likely to break above and have a couple of months moving in the upward direction. If that is true, that would be a phenomenal shape for this bottom consolidation to take, because there's nothing wrong with a sideways consolidation. It's sideways consolidation that creates weakness or fear. That is what we don't want. If we were to just continue sideways for a very long time, it would actually be the most bullish thing, because all it will do is fuel breakouts to the upside. But yeah, we'll have to see. I'm going to run this scenario for the next couple of weeks and just see how it actually plays out. But I think it might be useful to look at the broad market and see what expectations and what data we can find in the charts to support expectations going forward. We all know that Bitcoin and Ethereum are pretty much the leaders of where the market's going to end up in the end, as far as crypto market. And so the rest of these alts that we're looking for, strength and breakouts and different patterns here, they will all play out probably strengthened. It'll be kind of a yo-yo effect or a slingshot effect from Bitcoin and Ethereum. So if Bitcoin and Ethereum are showing weakness, these will show twice as much weakness. If they start showing strength, these will show twice as much strength. So it's all being driven by the S&P right now. And it may not last forever, and I don't expect it to, but as long as there's a correlation, we should take it seriously into our analysis. All right, I hope that gives you guys something to think about, and we will see if what we have discovered from this research actually comes to fruition. It should be interesting to watch out for the next couple of months. All right, you guys, you have a great weekend. I will catch you on Monday. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.